Hello and welcome. You're watching Business Today TV. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. Well, yesterday we saw the Nifty falling for the third day in a row and seems like the Nifty is set to snap the 3 weeks of gains that we've been witnessing. Will the bulls get their mojo back or will it really take some more time before the bears really loosen their grip on D Street? We'll find out all about it, but first up, the top headlines we're tracking for you this hour. Indian shares are likely to remain under profit selling on Friday as queues remain weak from overseas and traders will unlikely extend long positions ahead of the weekend. Cash shares from the PSU banking space may continue to see frenzied buyers as relatively cheaper valuations offer a margin of safety to investors. Extreme caution is advised. Good morning to all our viewers and very good morning to you, Shail, as well. Well, it's Friday and we really hope that the pain we have been witnessing in this truncated week really ends today. For the week so far, the Nifty is down by 2.2%, dragged lower mainly by the banking heavyweights. Now, in case the Nifty ends lower even today, this will be the worst week since February for the Nifty this year. Shail, I want to understand from you, what are you really watching out for on the Nifty today? Shail? Shail, can you hear me? All right, we'll see if Shail can hear us very, very quickly. Shail, I wanted to understand from you, what is the strategy that you're recommending on the Nifty today for all the investors, the key levels that you're watching out for? All right, I think there is some trouble with the technical glitch over there. We'll try and fix that ASAP. But remember, like I was pointing out, this year so far we've seen the markets been very, very volatile. But in case the Nifty really slips in trade today, this could well be the worst week for the Nifty since February this year. Already down by about 2.2%. And from the September 15 high, we've seen the Nifty also slash about 480 odd points as well. Remember, the high that we had touched was 20,222 and right now we're trading at 19,742. What has been the key pain point? It has been the non-participation of the big heavyweights like the likes of HDFC Bank, the likes of Reliance Industries, and in yesterday's trading session as well, the key has also been ICICI Bank that has also contributed to the overall impact on the kind of drag that we've seen on the Nifty as well. Now, when we talk about the Nifty Bank also, HDFC Bank did it on Wednesday. What ICICI Bank along with HDFC Bank played a part in dragging the Nifty Bank also yesterday. Remember, from September 15 high of 46,310, the Nifty Bank index is also down 1,700 points in just about 3 sessions this week. Now, the big question is that is there going to be more pain ahead or not? And that's going to be the key question really. However, another big headline that all our viewers must note for today is that India is going to be included in the JP Morgan Global Emerging Markets Bond Indices. And this has been a long-awaited decision and finally it is taking place as well. India here is expected to reach a maximum weight of 10% in Global Diversified Index. JP Morgan has said that 23 Indian government bonds with a combined notional value of $330 billion are eligible right here, and this could really lead to a rally in bonds and hence large inflows can be expected into the banks and domestic cyclicals. The big question also will be that will this really help the Indian markets, Sensex and the Nifty, to see some kind of a relief rally in today's trading session as well. And that's what we will find out from all our experts who will be joining in today. We'll get you experts, voices from our fundamental and technical guests as well. But let's quickly recap for you the way the markets shut shop in yesterday's trading session. We did see the Nifty ending the day at 19,742, and that was a change of about 159 points lower, and about 0.8% of a decline being seen for this one as well. Now, when we talk about the Sensex as well, in yesterday's trading session, of course, the Sensex pulled away from the lowest point of the day, about 570 points lower at 66,230, and that's where the Sensex really ended at. We'll get back to all the market details in just a short while from now. Do join in after this short break.
Prime Minister Narendra Modi played the perfect host, but the chill in the Indo-Canada ties could not be hidden by the warmth of Indian hospitality. Canada had, after all, just a couple of months ago, fired the first shot by calling off talks on a free trade agreement talks with India. And earlier Tuesday, India woke up to the news of the Canadian Prime Minister alleging role of Indian authorities in the killing of a Khalistani separatist in Canada. This was followed by a tit-for-tat expulsions of high-ranking diplomats. Most, however, agree that the diplomatic standoff is unlikely to affect trade relations between the two countries much. Canada is not even among the top 25 trade partners of India. Even Bangladesh is higher on the list. However, for Canada, India was the 10th largest trading partner in 2022. Bilateral trade between India and Canada jumped to $8.16 billion in 2022-23 after a couple of years of COVID-induced slowdown. India's exports of $4.1 billion to Canada comprised mainly pharmaceuticals, gems and jewelry, textiles and machinery, while imports included pulses, timber, pulp and paper and mining products. What analysts are concerned about is the huge investments Canadian pension funds have made in India. Many feel that continued tensions between the two countries could hurt these investments. The largest pension fund of them all is the Canada Pension Plan Investment Board, which had investments of $15 billion as on 31st March this year. This includes a 2.7% stake in Kotak Mahindra Bank. It also owns shares in around 70 other publicly traded companies in India. Another big fund is the Quebec Workers' Pension Fund, which has about $6 billion invested in India. The Ontario Teachers' Pension Fund has about $2.2 billion invested in Indian funds and securities. Most of these investments are in areas like infrastructure, renewable energy, technology, and financial services. Moreover, cumulative FDI from Canada since 2000 is about $4.07 billion. Over 600 Canadian companies have a presence in India, and over 1,000 companies are actively pursuing business in the Indian market. Importantly is the massive presence of Indian students in Canada, which may ensure normalcy in bilateral relations. In 2021, there were 319,000 Indian students in various Canadian colleges, contributing $4.9 billion to the country's economy. 226,000 more joined them last year. Indian students are the largest student group in Canada, accounting for 20% of all international students. There are also over 200 educational partnerships between Indian and Canadian institutions. Analysts also cite the cold relations between India and China. Skirmishes and standoffs at the LAC have failed to dilute trade relations between the two countries. Many, in fact, feel that trade and commerce could be the catalyst for a future revival in Indo-Canadian political relations. Bureau Report, Business Today Television.
If you like the video, do like, comment, share and subscribe.
We have Prasad with us right now, Prasad Chalavadi, the founder and managing director of Sai Silks Mandir with us. Welcome to the show, sir, and thank you so much for taking the time out for this discussion. The IPO is underway, ticking up. First up, help us understand a little bit more about your business. You're primarily focused on the saris and silk saris at that. Ultra premium silk saris, premium silk saris is what you sell, with a little bit more focus on the menswear and the ethnic wear for children as well. Primarily, you cater to the southern states of India, Tamil Nadu, Andhra Pradesh, Telangana and the likes. If you could help us a little bit more about how are you going to be using the proceeds of this company, and would you be looking at expanding northwards as well with the proceeds that you raise?
To start with, thank you all for giving us some time. Before answering your questions, I would like to take a minute to explain the little history about the company. I'm a first generation entrepreneur. We have founded this company in the year 2005, 17 years back. Before coming into this business, I was working as software engineer living in America. When I wanted to come back and start some retail, I have done an extensive research on which vertical of retail to bet on. So I figured out women-centric Indian ethnic this category is the go for the future. I found a great opportunity in this particular segment. So with that thought, in the year 2005, we started off our first brand, Mandir, with the first one store. And in last 17 years, we have established the total 4 successful brands. Addressing the different segments of the society, meaning we have addressed the entire spectrum of the market. So as of today, we have 54 stores between 4 brands. We operate in 4 states of South. As of today, we have 6 lakh square feet of retail under us, and we have 5,000 plus full-time employees, and currently we work with 4,000 plus weavers, master weavers, vendors across length and breadth of India at around 100 cities. So, and coming to the IPO, and also one more thing I want to make a note here. We are the youngest in this industry. Within 17 years of our operation, we could able to grow as one of the largest ethnic player. So if I have to categorize ourselves, I would rate ourselves as an ethnic player. Since we chose South as our first leg of our journey, we penetrated deep into the states of South with 54 stores. And since sari resonates well with in South as an ethnic attire, so we sell majority of saris. 2/3 of what we sell is saris, and 1/3 of other categories like women's salwar kameez and menswear and kidswear. So, and now, last year we have done a 1350 crores of top line, and with a PAT of 97.5 crores. And right now we are coming out with
Welcome. You're watching Business Today TV. This is Market Today and I'm Sakshi Batra. Well, the Nifty fell for the 3rd day in a row yesterday and seems set to now snap 3 weeks of gains. The big question is that will the bulls get back their mojo, or will it take some more time before the bears really loosen their grip on D Street? We will find out all of it, but first up, the top headlines we're tracking for you this hour. Indian shares are likely to remain under profit selling on Friday as cues remain weak from overseas, and traders will unlikely extend long positions as well ahead of the weekend. Cash shares from the PSU banking space may continue to see frenzied buyers as relatively cheaper valuations offer a margin of safety to investors. However, extreme caution is advised. Welcome to all our viewers to this special edition of Market Today. It is the last trading session of this week. This truncated week has rather been something that investors would want to forget, because we've seen the Nifty continuing to let off steam from the record high levels and overbought levels, and the weekly options expiry session on Thursday was no different. We've actually seen for the week so far, the Nifty 50 is down by 2.2%. It was dragged lower mainly by the banking heavyweights. Now, in case the Nifty ends lower even today as well, this will be the worst week since February this year as well. On the Nifty Bank, we're also seeing that the HDFC Bank, what it was doing on Wednesday, it was seen doing that with ICICI Bank in yesterday's trading session as well. Both of them played a part in dragging the Nifty Bank also yesterday as well. From the September 15 highs of 46,310, the Nifty Bank index is now down 1,700 points in just 3 sessions this week. Now, big question is there more pain ahead? Shail Bhatnagar now joins in on this session with me. Shail, very good morning to you. The pain continues, and it's Friday, and we'd like to rather forget this week entirely. 2.2% down for the Nifty, and perhaps the Nifty's bank is also all set to post a loss that will be the worst loss seen in the last 8 weeks. Your own thoughts on how should investors be viewing these two indices today?
Good morning, Sakshi, and thank God it's Friday. Which essentially means that Saturday and Sunday we can rest without the fear of a sustained sell-off. But when you see markets for over 27 years, you take the bad with the good. It's okay. I mean, so what if the market has or is correcting fairly sharply? This is the way to shake off the weak hands and welcome in newer people with deeper pockets. So it's all fine. I don't think so. You should be so angry or so against bears making money once in a while. In 1 week over 5 weeks. It's all fine. I mean, let's not be angry with them or take them to the cleaners. They've really bled for the first 21 or the first 18 sessions of September, and it's fine. They have their day for the next 2 or 3. I had mentioned that you will see some kind of profit booking 2 days ago, and that's how it's working out. Trend is weak. Let's look at the Nifty, and we have 2 particularly fresh, charts for you. What you see on the screen at the moment is the Nifty daily chart, and we'll just add the Nifty 15-minute chart, which you can observe the pain in the market. On each successive day, the Nifty has opened with a gap down, and on each successive day, the Nifty has closed at its day's low, which essentially points to pent-up demand for selling. Therefore, it being Friday, trade will be choppy. We will see some kind of short covering intraday, because traders would want to book their profits over the last 2 or 3 trading sessions on the short side, and that might push the Nifty higher on an intraday basis from support levels. Now, if that happens, it's an intraday sell, which means you sell the rise. So that's how at the moment commentary is. You see a bearish built-up of positions on the options chain for Nifty. 19,600, 19,500 are also opening up on the charts, and that is where the initial support levels are seen. Profit booking will also be seen on a lot of PSU stocks. Actually, the rally that we saw was remarkable, and some money needs to be taken away from the table, and the trigger was the government's offer for sale on SGVN, which is Satluj Jal Vikas Nigam Limited, a hydroelectric power company. They sold about 97 million shares, raising about 31 crore rupees at a base price of 69. So that's as far as Nifty is concerned, Sakshi.
Right. Shail, let's welcome our guest on the show. Mayuresh Joshi also joins in. He's the head of equity research at William O'Neill India. Welcome, Mayuresh. Good morning to you, and thank you so much for taking the time out. Always a pleasure having you with us on BTTV. Now, Shail has clearly said that, one needs to be mature enough, not feel too bad that the markets are not doing well this week. What is the sense that you have on the markets? Are you upset, or are you just taking it light and, letting the bears have a party?
Morning, Sakshi. Morning, Shail sir. And to just add on to Shail sir's comment of staying in the market for a long periodicity of time, A, makes you feel very old, and two, because it's for so long. I think the whole perspective in terms of how markets behave through cycles is something that we have taken in our stride. So I think it's a part and parcel in terms of how markets will behave. We had a very good run for the markets. Obviously, there are a lot of macro headwinds that we have been flagging off. A lot of analysts on the street have been flagging off with respect to how the bond yields are moving in the US market, the inflationary and supply side pressures, and also the geopolitical upheavals that you're probably seeing across parts of the world as well. So I think it's part and parcel in terms of how market moves are. If market moves in a linearity, Sakshi, I think making money would have been very, very easy, and the market will not allow you to do that. So I think it's a very healthy sign, because at O'Neill and what our founder had said, that a bear market is a necessity, because I think the next cycle that will follow will probably come out of this bear cycle for whatever time periodicity it lasts. And therefore, new leaders, new sectors will emerge out of a bear market rally for the next bull run to probably continue. So in my opinion, I think it's a healthy distribution that we are probably seeing. Markets were overheated, overvalued to a certain extent. And to a certain extent, I would view it very, very constructive if the markets are coming off and profit booking is happening. Is there a structural weakness for the Indian markets per se? Do not think so, because most factors, macro and micro, probably stand in our favor.
I think, Mayuresh, what has basically happened is that the US Fed's hawkish stance is now reverberating throughout the globe as far as equities is concerned, and it's a risk of trade that's happening. Inflation will remain there for a while, higher interest rates will remain there for a while, and all that is now being, how should I say, booked into prices. If you look at how the advanced decline ratio moved over a period of time as far as the Nifty and the Bank Nifty are concerned, that's a bit of a pain that's seeping into the market. How do you see US Fed's hawkish commentary?
Morning, Shail sir. So to a large extent, it was penciled in. The expectation in terms of a rate cut now clearly has got postponed to a quarter, because a large part of the market believed that May, June is when the first rate cut cycle will probably begin. That has definitely got delayed by a quarter, to say the least. The second aspect in terms of higher for longer will also mean that the mortgage rates, the interest rate payments that the US government has to service, the credit card delinquencies that we are tracking, and the student loan payments which will start coming through, will mean that there will be pain as far as employment numbers are concerned, as far as GDP growth is concerned. And the market is now trying to pencil that in terms of the S&P earnings per se. So to a large extent, getting priced in, as you rightly said, will there be some consolidation in the markets as far as the US markets are concerned on how these numbers stack up? Absolutely, yes. But for the Indian context, Shail sir, I think the positive thing that has come today morning is our inclusion in the debt indices as well. So India has got included in the debt emerging bond markets, which is a very, very positive sign, because from the coming year, a lot more money will come and flow into our debt markets, which also will mean that the stability, as I said, as far as India is concerned to the rest of the world, probably gets maintained as well. We are also heading into the election year, so there will be a lot of volatility on what probably gets thrown out in terms of election promises, so on and so forth. But I think the market will also probably start bracing themselves for a pre-election rally. So I think the next few months, at least in the Indian context, is going to be a roller coaster, right? But you need to be extremely sector and stock specific for our markets. US and the Fed actions getting priced in for these.
Yeah, Mayuresh, I'd like to touch upon this inclusion of Indian bonds in the JP Morgan Emerging Market Index a bit more. You are better placed to explain this. My understanding of the bond market is almost minimal. How will this change the environment as far as India's balance sheet is concerned? If we get more money into government bonds, which is overseas, will that impact the fiscal deficit, the borrowing? How does it work?
I think it should be taken positively, because if the flows are coming in, I think they are long-term flows, which probably means that they are not hot money, which probably comes in and goes out. So I think the lock-in period for staying within the longer duration bonds, as far as the Indian markets are concerned, is going to be very positive. Obviously, I think the kind of spread that the exchequer will make is going to be incrementally positive, because the kind of interest payments that you'll probably do and the incremental money that gets to use in capex projects, which will have a longer term IRR in terms of returns on the projects that they will put this money through. I think that spread will be positive over a longer period of time. And that is how I think the entire perspective in terms of more money coming into India with a longer duration, adjusted for the payments, with stronger IRRs in the projects that they probably invest in, and the government also enjoying a reasonable amount of spread in terms of getting that money and deploying it for return on invested capital, as we call it, for our corporates, should play out effectively in terms of our capital investments as well, which should be taken very, very positively over the next few years.
Okay, I think
Brijesh
Ail is also with us, Shail. So let's welcome him as well. Brijesh Ail, Head of Technical and Derivatives at Retail Research IDBI Capital. He's also joining in. Good morning to you, Brijesh. How are you feeling about the markets this morning, Friday morning? Do you think we will have some kind of a relief rally today? Is that on the cards or not at all?
From the intraday perspective, there can be some bounce because we are deeply in the oversold zone. There's again from the technical point of view, but then the space room for 19,500, 19,600 is still open. So directionally, we might still slide further, maybe in the next week or so. But then for the day specific, I think there can be some bounce. Trading bounce is expected. Specifically in Nifty, I mean, I'm not very sure of the bank Nifty, but then Nifty, I think some trading bounce is expected during the day.
Welcome, Brijesh, and this is the right time to discuss some of your trades that might work out on the long or the short side in the markets today. What are you looking at?
There are two trades. Basically, one is the Narayana Hridayalaya, which has already given a breakout during the last Friday. So I think this is one counter which I am very directionally bullish on the counter. I am looking somewhere close to 1150 on the upside. So I think, and it's corrected over the last 3 days. So I think this is a good opportunity to go long in Narayana Hridayalaya, and it's a kind of a 10-12 days kind of a trading bet, where I think good amount of 6-7% kind of gains can be seen in Narayana Hridayalaya. And second, I would recommend is the L&T. So in the last yesterday in the closing hour, there was a good amount of buying which was seen in the L&T. So I believe this again a F&O kind of a bet. I'm looking for another 100-120 points of a move from the current level. I believe before the expiry, maybe today itself, not today, maybe 1 or 2 days, we can see 100 odd points rally in L&T. So I'm quite positive on L&T. So it's a stock specific approach. So these are the two stocks which I think one should trade with.
Okay, we'll look at L&T as well as Narayana Hridayalaya, but for the moment we have pre-open rates in front of us. It's a green tick on the Nifty, and believe me, it's more than welcome, but I'm sure this will disappear over time. We are seeing a 55 point uptick on the Nifty in pre-open. 19,750 is where the index is. Let's see how it sort of settles down. Okay, the heavyweights first. Reliance flat 2364. I want to see HDFC 1.4% higher, 1575. Remember, the candle yesterday's close was very indicative that selling might have abated. We'll see how that works. Apart from that, let's look at Infosys. these three stocks make up the index in terms of sentiment. 1503 flat. So the top three stocks are flat. Now let's look at other gainers. We have ICICI Bank flat at 959. How about Axis? Down 1%, 1004. Remember, this is the stock near record highs, the only one in the top heavyweights which is near record highs. SBI 2% higher, 600 is the price. ITC down 0.5%, 444.95. How about Hindustan Unilever? Flat as flat can be, 2472. Let's pay attention to what F&O stocks are doing. For the moment, the entire index heavyweight plot is completely flat. Nothing much to report here. Unusual stocks moving. The good ones, Bank of Baroda 1.8% higher, 211. Canfin Homes 770 in front of you, 1.5% higher. Very high beta stock, Persistent 1.3% higher, 5080. Maruti in the green 1% higher, 10,400. Let's shift focus to NSE 500. Let's see what's happening here in terms of top gainers. Nothing much to report out. Indian Overseas Bank 2.5% higher, 44. UCO Bank 2% higher, 4250. We have Power Finance Corporation 2% higher, 234. Let's look at the losers. SGVN now almost exactly at the price where the government is selling a 4.5% stake, 6980, 1.8% lower. We also have Axis Bank in the red, HCL Tech in the red, and we have Bajaj Auto in the red, all down about 1.5%. The Nifty is settling 10 points lower, 19,732. Actually, it's not a painful opening. It being Friday, trade will be choppy, but volumes will be low. Nobody wants to extend positions over the weekend. That is how markets are coming in. Let's stick with Brijesh. Brijesh, what do you think of HDFC Bank? Of course, if you look at the candlestick chart on HDFC Bank, yesterday was a day when the bulls and the bears evened out. Day's high was 1568, low was 1553, the low was 1537, and the stock closed exactly in the middle, 1553. What do you read from this candle, Brijesh?
Yeah, for the basically HDFC Bank, if we see that is broken the 200-day as well as the 50-day moving average on the daily chart. So definitely, right now some of the structure for the HDFC is weak. The point is HDFC at 1540 level. This is somewhere. This is the area which it has been holding for the last 45 weeks. So by any chance, but when I look at the monthly time frame, I have some sense which says me that maybe in the short term this level will be broken, and its correction close to 1370, 1400 is due in HDFC. Maybe from the positional point of view. So I'm not very comfortable. Somebody who wants to take a trading bet can take a bet because there is a divergence in the RSI oscillator. So there's a positive divergence which says that can be a pullback in the HDFC from the trading point of view. But from the directional point of view, I would advise to wait and watch at least for next 3-4 months. We'll figure out whenever it comes close to 1370, 1400. This is what I expect on the HDFC Bank. So from a 1 or 2 days trading point of view, definitely one trading bet can be there, where we can talk 50-60 points on the rise. So it's close to the supports. Risk reward ratio is very favorable. The risk is hardly 20-25 points from the current level. So one can look for the trading bet at this price.
Okay, Brijesh. And Maniresh, in fact, first let me come to you on HDFC Bank then. Do you think in hindsight at 1553 would be a great level to accumulate HDFC Bank? For somebody who has a 3 to 5 years long-term perspective, what would you suggest that investor today?
The street, Sakshi, is gestating the news that has come out of the analyst day. Obviously, I think the deterioration that the management is talking about in terms of asset quality, compression in NIM, so on and so forth, is getting priced in to a large extent. And a lot of analysts on the street are of the belief that this might be a temporary phenomenon. By temporary, I mean if you're a genuine long-term investor.
Recording in progress.
The next 2 quarters, 3 quarters might be a little bit tough. But with the kind of balance sheet that they possess at this juncture and the expectations in terms of valuations which have come off quite significantly, I think the kind of earnings expectations that one can derive over the next 3 to 5 years can be outstanding for this bank itself. Just to put some stats, look at the profitability figure in 2012, and in 12 years, that profitability figure has jumped almost 10 to 12x. You look at the branch network that they've got, and they're still expanding the branch network, even in times of the digital offerings that a lot of peers have to do. So I think it's a qualitative franchise at the end of the day. Even if it consolidates with this news, I think longer-term investors can definitely look at this stock. This stock can do phenomenally well over the next 4 months.
Sakshi, I think we've been needlessly worried. The pre-open is fantastic. We'll probably see some kind of short covering, and the inclusion of Indian bonds in JP Morgan's emerging market index has been greeted with some kind of enthusiasm on at least pre-open prices. Nifty Bank has settled 83 points higher, 44,707. Remember, it had fallen 700 points yesterday, and the last 3 days have seen about 1,400, 1,500 points being sheared off as far as Bank Nifty is concerned. Let's look at prices. Most importantly, State Bank of India, remember this is India's largest banking franchise, controlling 26% of banking in Asia's second largest economy. It's the top gainer in the index heavyweight space, 593.50. Reliance 0.5% higher, 23.76. L&T 0.3% higher, 29.08. Remember, this is Brijesh's pick for today. HDFC Bank, good news, 0.4% higher, 15.59. Kotak in the green, Bajaj Finance in the green. In fact, Sakshi, what's really interesting is that 6 out of 10 stocks in the index heavyweights are in the green. This is really good news. Maruti is 1% higher. UPL is 0.3% higher. Remember, I'm talking about high beta. Adani Ports is 0.3% higher. Apparently, you'll see some kind of short covering in the initial first hour of trade, and then let's see where Nifty and Bank Nifty settle. Brijesh, your views on pre-open?
So I would definitely like to take a long call on the Nifty at current price. Somewhere I believe this 19,800 should be taken out in today's session. So 50-60 points should be the plus closing it. Maybe 19,800 plus is what I think should be the close for the Nifty. And I would be happy if we see a close for the Bank Nifty above 45,000. But that conviction and that is not very strong on the Bank Nifty. But then Nifty, I believe 19,800 can be the possible close.
Okay, Mayuresh, again now one more stock, Maruti Suzuki, the second top gainer, in the pre-opening trade today, 1% higher, 10,378. I think brokerage houses are also pegging, higher prices to the tune of 11,800, 11,900 odd for Maruti Suzuki. Now, what is your take on Maruti? Right ahead of the festival season, is this a great level to buy for all these investors who've been looking to buy at the festival buying spree?
Should be, and I think a lot of positives, Sakshi, for the stock per se. You're thinking about how the market share gains will be. Management sounds very, very optimistic to take it from 42.5%, well over 47, 48% over the next few quarters and years. The SUV portfolio should increase quite significantly. The management seems very, very optimistic about that. The entry-level vehicle market also probably is growing at a reasonable pace. And the best part in terms of that CNG market and the hybrid market is almost 40-odd%, expected to reach 50-odd% in the next few quarters. Clean balance sheet and the expectation in terms of margin improvement, because a lot of factors like semiconductor issues are largely behind us, and a better product mix will ensure that margins also sustain going forward. So yeah, we remain optimistic. This stock remains onto our global focus list as a clear disclaimer.
Okay. Brijesh, let me take your view as well. In the auto stocks, if we see the kind of rally that we've seen on a one-year performance, Tata Motors definitely tops the rally, 45% higher. Bajaj Auto, M&M follow with 20 to 40% surge. But Maruti Suzuki is just 9% higher. Do you think now is the time that Maruti Suzuki will catch up with the kind of move that we've seen in the other peers?
Yeah, the chart pattern of the Maruti is definitely very strong. So I do believe it's a little bit of a higher range kind of strong. 10,000 it's a price. So basically, the entry level for the normal retailers, they look at the small this tick size. But then definitely from the charts point of view, it is quite extremely positive. Entire auto sector, I believe it should be outperforming, and the view for the Maruti would be somewhere close to 11,500. So this any corrections which we are observing in the current market should be viewed as a buying opportunity. I don't believe Maruti can correct below 10,000 at least at current scenario. So whatever this opportunity should be viewed as a buying opportunity.
Sakshi, there is an interesting trend in the Asian markets. There has been a very sharp recovery on indices in Hong Kong, indices in Shanghai, Kospi and Taiwan. All of these stocks, all of these indices have moved very, very sharply above their intraday lows. So you just might see, bears on the back foot again. Let's get Mayuresh into this conversation. Mayuresh, yours is a global research house. What are they talking about other Asian peers compared with Nifty? How do you see the day panning out given the bounce that we are seeing?
I think the day seems to be quite constructive because I think a lot of bad news that the US market is throwing is probably getting gestated. And I said, I think a lot of price action, as I was speaking to a lot of our analysts in the US yesterday night, seemed to suggest that consolidation in the S&P will start happening and a lot of bad news is getting priced in. As far as the Asian markets are concerned, I think India still remains top of the pile. Shail sir, I think the kind of data that is coming out, Kospi specifically, which is Korean index, the Philippines market had a horrendous inflation print. So somewhere down the line, macro concerns still emanate from these markets. So pullback and a consolidation is expected for the Asian markets and for our own markets as well.
Okay.
Okay, be that as it may, we are interested in the intraday pickup as far as markets are concerned. Actually, we're very close to the opening tick. Let's look at where markets are likely to open up. Nifty is now flat, 19,744. Bank Nifty 44,707. I'd like to see what's happening as far as the F&O space is concerned in other index heavyweights apart from the usual that we talk about. Kotak Bank 1758 and Tata Motors 0.5% higher. Okay, ladies and gentlemen, the markets are open on this lovely Friday morning. Nifty 19,750, flat as flat can be. Nifty Bank, we have a momentum there, up 100 points, 44,717 as far as the initial trades are concerned. Nifty IT is down 0.5%, 138 down 32,770. Let's look at the index heavyweights. Reliance in the green, 2370, 0.2% higher. HDFC Bank in the green, 0.5% higher, 1763. Let's look at Infosys, down 0.5%, 1493. What is Axis Bank doing? In the red, 0.25% lower. ICICI Bank in the red, 0.5% lower, 955. Let's see for how long this bounce lasts. Nifty in the red now. Let's shift focus immediately to Nifty, to F&O trades, and look at the top gainers there for the moment. That is coming on the screen in front of you. We have a lot of action happening on the banking side. The system is not moving at the moment.
Punjab National
yes.
Bank,
Canara
all
Bank,
of all of the
2.5%
PSU
higher,
banks higher in
373.
trade. Yes, absolutely, Shail.
Sakshi, go ahead, please.
So actually, it's Canara Bank, it's Bank of Baroda, it's Punjab National Bank, all of them in the top F&O gainers list as far as the market opening are concerned. In fact, Nifty BSU Banks is the top gainer, 2.5% higher in trade, and the PSU banks continue to rally. State Bank of India continues to be the top gainer on the Nifty index, 1.3% higher in trade. Of course, a whole lot of private sector banks are also following suit. You can see the likes of IndusInd Bank, Bandhan Bank higher in trade as well. Life insurance majors, NBFCs, Bajaj Finance, Kotak Mahindra Bank, all of them pulling up in trade. Reliance Industries also higher now, and that's also up at about 0.4% higher in trade right now. So the big heavyweights definitely coming back in action. Shail was pointing out how HDFC Bank's likely to start with a positive bias, and you can actually see a 0.4% move right there as well. Brijesh, let me come to you and ask you, how would you really see the market opening?
I think it's quite positive. The way I was expecting, the Nifty is already up. It has started on a positive note, so the momentum should be definitely on the higher side. PSU Bank is something which is picking up. Beside PSU Bank, one observation more is the HDFC AMC. I think there's a range breakout which we can expect in the HDFC AMC. Currently 2670 is the future price, so I think there can be another 100 odd points momentum in the HDFC AMC. So one should keep a watch on it. Secondly, the Canara Bank and Bank of Baroda are the two bets which I think one should keep a watch, because in this market, the Canara Bank is now at the verge of breaking its the last 3-4 sessions high. So somebody wants to take a bet on the PSU Bank, the Canara, and Bank of Baroda. This is the two bets which I think should be the can be viewed as a intraday as well as a trading opportunity.
Okay, we have an interesting opening, and I think a lot of shorts will be covered in trade today. Nifty is up 14. Sakshi, if you look at the broader markets, Brijesh, something interesting has happened. 12 out of 12 stocks in the Nifty PSU Bank are in the green. All of Nifty Realty is in the green, that's 9 stocks. And we have a very, very strong advanced decline ratio. In the Nifty 500, 350 shares are in the green, just 150 in the red. And in the broader markets, 1312, 1,300 shares are in the green, only 400 shares are in the red. So the understanding is that you will see very, very sharp rally coming in, and that's evident on the Nifty. Now up 20, it's at the first pivot level of 19,770. So short covering is likely to come in, and Sakshi, across the board, the entire high beta space is doing fantastically well. We have Canara Bank 3.5% higher, PNB 3% higher, CSP 2.5% higher at 329, Bank of Baroda 2.5% higher, 212. The banks are taking it away, as also a lot of buying that you see in high beta counters like Tejas Network, 834, 1.5% higher. Let's look at the defense space. It's taking it away. The dip has been purchased. Masdoc 1.2% higher, 2235. Midhani a percent higher, 406. Lots of move coming there, and I think the railway stocks are back in action. 1 second, please. Yes. RVNL 3.5% higher, 163. Railtel 2.5% higher, 216. And the entire PSU basket is again buzzing with gains. Union Bank, Indian Overseas Bank, Canara Bank, Bank of Baroda, UCO Bank, Bank of Baroda. These are the top 12 gainers in the entire 76 share PSU basket. Brijesh, your call on the Nifty now, what would you do? 19,700 call looks good for September 28?
Yeah, extremely positive. I do believe, I think today should be one of the positive day. It can be a more of a short covering also, like bounce back also. So in the money as well as 19,800 option also looks quite positive. I'm not checking on the rates, but looking at it from the technical point of view and even in the writing point of view, I think there will be a strong bounce. So anybody wants to take the position should definitely take 19,700, 1900, both looks quite strong, promising.
Okay, Mayuresh, what would be your top pick as far as the smaller PSU banks are concerned? Of late, we've been seeing a whole lot of movement in the second-rung PSU banks like Bank of Maharashtra. We've seen UCO Bank, Indian Overseas Bank, all of them moving in trade. Your particular top pick, from all of this, Union Bank 5.5% higher, Indian Overseas Bank, Indian Bank, Canara Bank. Any of the topics that you'd like to suggest?
We like Bank of Baroda at this juncture. We obviously held a couple of smaller ones which we discussed on your show as well, Bank of Maharashtra, Canara Bank, but they've run up a little bit too much for comfort. The run-up might still continue because valuation still on their side. The expectations of balance sheet growth still continuing. But at this juncture, the Bank of Baroda with the price to book multiple even going forward for a large size bank at 1 times seems very, very attractive. They're very confident of maintaining NIMs around 3.3%. The expectation in terms of provisioning is largely done for their assets as we speak. And they've been very, very constructive in terms of their risk-weighted assets as well as their deposit growth. Because ultimately, I think the liability franchise and a better managed liability franchise is something that is going to make these banks report better numbers going forward. And we believe Bank of Baroda has the right ingredients to globally do that, both in terms of core fundamentals and valuations as well. So at this juncture, our top pick in the PSU banking space will be Bank of Baroda.
Mayuresh, you took it easy. We had asked about the second-run PSU banks. Bank of Baroda has been your top pick for 18 months, that I know. But, Union Bank, Indian Overseas Bank, Indian Bank, Bank of India, these are banks and branches which we don't even look at when we cross them on the road. This is where value is being unlocked. All of them are below book in some cases and below 1.5 times book. Let's get Brijesh into this conversation. Brijesh, second-rank PSU banks, what do you like?
So basically, we are extremely, if we look at the PSU Bank weekly chart, it's already given a very strong breakout. So I always believe that whatever the corrections is coming in the market is always an opportunity for the PSU Bank. If I look at the derivatives data, the stocks like Canara Bank has given a long build up. So I think even the Bank Nifty is now currently it's forming a long build up from the derivatives point of view. I think what I said in the morning, Bank Nifty may not perform. It looks like Bank Nifty is going to outperform the Nifty as of now because the way PSU banks are moving up, even the ICICI Bank from the yesterday's low is now picking up the momentum. And RBL Bank is what from the derivatives data I can see there's a long build up. So I think the bank is going to outperform. I will change my view from Nifty to Bank Nifty. I do stand that Nifty is also poised for 19,800, but then the way the Bank Nifty has corrected 700 points yesterday, so definitely 300, 400 points of the Bank Nifty bounce back is quite possible as of now looking at the opening start.
Okay.
Absolutely. 924 on the screen. And Sakshi, you've seen the Nifty move 41 points higher, 19,784. This is a short covering that will put a lot of bears on the back foot, Sakshi. And we'll see this momentum build up. Remember now the pivot, which was at 19,770, will be a very, very strong support. The first resistance on the Nifty is 19,824. And probably that is what the bulls have in mind. Sakshi, what else have you seen?
Well, Shail, remember yesterday you had picked out M&M Finance as your watch list stock, and all of the finance names are also pulling up. Apart from the big heavyweights like Bajaj Finserv and Bajaj Finance, I'm also looking at Shriram Finance, LIC Housing Finance. Yesterday, JM Financial was also moving higher in trade. So, wanted to take, Mayuresh's view on that as well. How should one be really looking at the second-rank finance names now? Leave alone the Bajaj Finserv and Bajaj Finance, but the mid-cap ones. How are you looking at these?
So constructive on the larger names with a better franchise, Sakshi, and our take is that the better managed ones will keep on doing well over the next few quarters. Within that, Chola Finance is something that we continue to like. 2-3 factors. One, I think if you probably look at Q1 numbers, very, very strong expectations in terms of AUM growth will continue at a very good pace in higher double digits. And therefore, I think the kind of growth that they will sustain when it comes to advances or disbursements growth, the strong capital adequacy that they have, the product mix or the advances mix that they carry on to their book, And the asset quality pressures, which have come off quite significantly over the past few quarters, makes us believe that it is very well positioned to probably ride the kind of expectations from an earnings perspective that we built in of 20-25% over the next couple of years. So our top pick within this space will be Cho.
Okay. Got that. Apart from this, I think...
Mayuresh, I'd like to take your view on the PSU.
Yes, please, Shail, continue.
Sakshi, please continue.
Okay, the
Okay, I'll
realty...
Mayuresh, okay, Sakshi, yours.
Okay, so the realty pack, Shail, I think that's also moving pretty sharply. Mayuresh, how are you looking at the entire real estate basket, you know, and again the mid-cap names over there, Sobha, Macrotech Developers, Prestige Estates, DLF. What kind of move do you really see? Because again, this is another pack where a lot of buying really happens during the festive season and the second half of the year. Navratris will start, all the auspicious days will start. Your thoughts here?
So absolutely, I think two aspects here. One, inventory levels for the entire sector as a whole has started coming off quite significantly. And at the same time, the selective launches in terms of pre-sales velocity for a few players have been picked up very well. Take the instance of DLF. A couple of the launches just get sold off as soon as they are announced. So to a large extent, leverage, cash flows, and the kind of inventory levels that real estate players are sitting on becomes a very important gauge to probably analyze in terms of how the growth will come through in the next 2 to 3 years. And having looked at these aspects, Godrej Properties is something that can really do well. Leverage is minimal onto their books at around 0.5 times debt equity. The kind of projects that they are having in terms of an asset-light model that they are following will ensure superior top-line growth. And the expectation in terms of cash flows from existing inventory, which is quite manageable along with new pre-sales velocity, should hold good for them. From an absolute momentum perspective, I think stocks like Sobha and DLF can continue doing well because they are deleveraging their balance sheet to a large extent, specifically in the case of DLF. And with a lot of annuity projects also expected to pick up steam, and the commercial part of their projects in terms of fit-outs expected to get renewed at a better rate as we move ahead. I think the mix that they probably have in terms of annuities as well as residential should also hold them in terms of a good stead as far as earnings is concerned.
I think the story for today is banks and the good news coming in for the inclusion of Indian government bonds in JP Morgan's emerging market bond index to the extent of 10% weightage has been greeted with extreme enthusiasm in the market. Let me share some data that's coming in. If you look at the Nifty PSU banking index, it's at a record high. It's also the top gainer, up to 2.7%. What's really interesting, Mayuresh and Brijesh, is that look at the volume. We have not even seen 15 minutes of trade, and all these stocks, Union, Canara Bank, Indian Overseas Bank, Bank of Baroda, are already showing 30-35% of volume in the first 15 minutes of trade compared with the 5-day daily average. So we are going to see a blowout day as far as these banks are concerned, simply because the maximum number of government securities are lying in PSU bank treasuries. And with the inclusion of these government securities in the JP Morgan Emerging Markets Bond Index, it's going to be a win-win situation as far as greater liquidity is concerned for their treasury operations. Mayuresh, how would you view this angle when it comes to the positivity that we are seeing on the PSU banking basket?
Well, absolutely, your point well taken. And the large expectation is that as this starts flowing in, this should account for at least 30-35% of the overall government borrowing. So it removes a lot of stress that the country's balance sheet has to take with the inclusion of the Indian bonds into the bond market. With the long-dated bonds and the short-dated bonds that you're absolutely right, Selser, that a lot of these PSU banks hold, trading will become a lot more easier. What kind of rules that can get in with this now becomes extremely important, both in terms of the convertibility, in terms of the taxability options, And therefore, I think with banks sitting on a large part of their bond portfolio onto their treasury books, I think the treasury incomes for banks will also receive a boost, as we said in our opening remarks. So I think it's a very positive thing that the markets have probably taken this story.
Right. And remember, a lot of global bond funds who track the JP Morgan Emerging Markets Bond Index will have to buy into the Indian bond securities, which will be a part of this index, simply because they track the underlying index, and that will provide a lot of liquidity as well as better bid and ask prices when it comes to the bond market. So deepening of the bond market, as also welcoming in global players. This will pull in about billions and billions of dollars into the Indian macro balance sheet, and that's a very, very good sign at a time when equity markets are at a record high. FDI is coming in very sharply in the manufacturing sector, and now it's the bond market that is clicking in. I remember, Mayuresh, very, very long ago, somewhere like 25, 26 years ago, a phrase came to my mind which said, "Gentlemen prefer bonds." And that's proving to be true in India at least. You are the one who keeps on giving us, shipbuilders are making rockets, railway stocks are now making bullet trains. So here is one from my side. Gentlemen prefer bonds.
Right.
Oh, absolutely, Shail sir. In fact, मुझे तो फेविकॉल की याद आ जाती है कि जो फेविकॉल की टैगलाइन है, I think that will be appropriate for the bond market as well. ये बॉन्ड अभी कभी टूटेगा नहीं.
Wonderful, wonderful. Yeah. So another comeback from Mayuresh right there. He's one up again then, Shail, right there. So you'll have to come up with a smarter one now. Next, okay. So staying with the banks now, Mayuresh, from the private banking space now, leave alone the big four, HDFC, ICICI Bank, Axis and Kotak. I'm asking you about RBL Bank. That's up 3% today. Bandhan Bank, that's 1.5% up. IndusInd Bank, that's 1% up higher in trade as well. Should one use this opportunity to start building up on these banks as well?
So valuation is very attractive for a bank like RBL as an example. But the ideal situation will be to probably look at numbers, because they've taken a lot of beating as far as their balance sheet is concerned, Sakshi. And the confidence will come back in terms of how their reported numbers start coming through. So one good quarter followed by the next quarter, which shows an increasing trend, should get a re-rating back for RBL Bank. But within the bank that you mentioned, I think something like an IndusInd Bank clearly probably stays top of the mind. The kind of product mix that they've got, obviously I think vehicle financing is the top part. They've also got a credit card book, but a large part in terms of the delinquencies related to the unsecured book is largely getting covered up, and therefore I think the kind of asset quality pressures that can get built up for the bank per se would not be proportionately higher, and therefore I think this bank probably looks well placed in terms of riding the momentum as far as strong advances, the deposit growth, balancing that treasury book to a large extent in terms of ALM, and therefore with provisioning expected to increase, giving that balance sheet cushion as well. So I'll keep IndusInd Bank market.
Okay, Brijesh, why don't you tell us which is looking as the most promising chart as far as both PSU banks and private banks are concerned. Pick out one stock each, the most promising chart right now which can give handsome returns over the next course.
So one bet is from the PSU bank. So I think there is SBI is again look very close to the supports level. So I think that can be a safe bet. Because 590 levels are the very strong base for this SBI. So SBI can go back to 600 and 605 levels. So that's a trading call from the day perspective. So I think that should be the trade from my end. And next, I would the way the market is correcting, I would be a little bit cautious. I would wait for the market to come slightly down and then re-enter the further long positions. Sakshi, I think I can see One counter I can see that the AU Bank is somehow picking the momentum from the FO space. So I think that can also be one of the bet. So AU Bank, I probably at 750 levels, I think there's some strength coming in. So maybe 15-20 points rally can be seen the AU Small Finance Bank. So that can also be kept on your watch list.
Okay. Okay, got that. Already up by almost 1% in the last 6 months odd or so. We've seen AU Small Finance Bank showing about a 30% surge. Right now, trading at 750 odd levels, and it's nearing to its 6-month highs move as well. 30% high over the last 6 months, definitely. So thanks a lot, Brijesh, for being with us on this special edition and sharing with us all these important picks that we have. Okay, so you stay on with us. In fact, let me thank Mayuresh right here. I think Mayuresh has another meeting to go to. Thank you so much, Mayuresh, for being with us on this edition and sharing all these special, one-liners that we always enjoy from you, apart from the stock ideas that you always discuss, which are very, very insightful again. Hope to have you back next week and discuss many more ideas with you again. Many thanks, Mayuresh. Brijesh, please stay on and we will discuss many more stocks with you. The one stock that is picking up pace from the broader markets, I just wanted to ask you, how are you looking at that? ITI Limited is up by 9 odd %, and again PNB Gilts, another stock that's up 15-16%. Is there any move that you're charting out on these two stocks particularly, and then we'll come back to the other discussion?
So ITI, I think it's structurally it's very strong positive. So this momentum can lead, maybe in coming months 240 can be the upside target. So this opportunity over the last couple of days there has been correction in the ITI. So this can be viewed as a buying opportunity. I think 240, 250 can be the higher side rate. It's there is nothing weak or some. The monthly structure is very strong. It's a volume breakout. So I do want to take the positive view. Coming to PNB Gilts. So 77 is the current price. It's at the verge of giving a range breakout in the monthly time frame. So again, a positive bet. So today it's been a gap up trade. Any correction whenever this gap is filled, whenever it comes close to filling this gap, I think we should look to add the long position. It's a very strong bet, I believe. I won't be surprised maybe in the coming months if it bounce back to 9500 level on the higher side. So both the counters are looking very extremely positive.
Sakshi, the interesting part about PNB is it's still below book. It's trading 0.9 times as far as book is concerned, which is at about 95, 96 rupees, and at 76.50. The minimum parity that you would require in this kind of a market would be 1:1, and therefore you see a lot of our technical friends also pointing to that particular number which we have. In fact, PNB on a 1-year basis has been the best performing bank in the F&O sector, up 88%. But I'd like to gather your attention, Brijesh, on Axis Bank. Near a record high, and this is one question that I've been waiting to ask a sensible technical person, therefore we have you. Axis Bank is up 29% in the past 1 year as far as the F&O market is concerned, and it's the best performing large private sector bank. What do the long-term, medium-term charts of Axis Bank tell you?
Yeah, if we look at the long-term chart, the Axis Bank in the month of October, the stock has given a very strong breakout, and from the technical point of view, we observe this as a bullish head and shoulder kind of a pattern. So if I talk about pattern target, the breakout has come at the level of 850 levels. So and the target from those levels are another 400 points. So if I need to calculate 850 plus 400, so I can easily observe 1250 as the upside target for the Axis Bank. So in the recent run, whenever there is a correction in the Axis Bank, we always hope for the buying opportunity, as we believe 1250 odd figures can be on the higher side. So extremely positive at Axis Bank. Axis and IndusInd are the two bets which we are extremely positive from the private space.
Hmm. In fact, Shail, you
Absolutely.
rightly asked
Access.
about PNB. In fact, PNB is up 90% on a one-year, perspective. It's the top gainer, and of course, followed by a whole host of moves that we've already seen. Of course, then after this kind of a stupendous move, one begins to feel that is there more upside or not? Even though the price tickets are lower than 100 for most of them, right there, and very very attractive price points when we compare with the private banks. What one still believes, would feel is like, beyond 85, 90% kind of a surge. Is there more upside left for all of these stocks?
Yes, yes, yes. I think this piece is going to perform much more higher from the current level. So I don't think so. Definitely. So without getting any not even a cautious view on this counters, I think this is a story for the next year and so. I think opportunity should be viewed as a buying opportunity, and there's a good amount of upside. Maybe 30-40% kind of upside is still remaining in
Hmm.
this. So it's kind of a aggressive as well as a safe bet is what I.
Okay. Fine. One more stock let's highlight. I wanted your view, Brijesh, on Berger Paints. It's actually trading ex bonus, I believe. It's up 3.8% higher. 1:5 is what the bonus issue is likely to be. Your thoughts on the Berger Paints? I think it is actually, we're not seeing the reflected price right here.
Right
Your
now,
thoughts? Yeah.
yeah,
Berger
I
Paints.
think, yeah. Specifically after the bonus, I think there will be some profit booking. The stock is in the overbought zone. There has been recovery over the last couple of days, maybe because of the bonus. The stock has already run up. The prices are placed far away from the moving averages, so this makes me believe that it can come back to the 600 levels. So I won't be taking any fresh bet on the budget paints. Having a positions, if I'm a trader, I would book my trades and would wait for the declines. I think that there is a kind of 6-7% kind of correction during the budget paints only because it's in an overbought zone.
Yes, Sakshi, this is the bonus readjustment that has happened, and paints probably do not make sense at this point of time because crude oil prices are trading at 11 months highs. The Berger Paint stock had run up over the last 4 or 5 trading sessions to readjust to its bonus, which was effective from September 22nd. This is a bit of a readjustment trade that's happening, and we'll obviously see some kind of profit moves coming in. The Nifty now flat, 19,739. The initial enthusiasm that we had because of the inclusion of Indian government bonds in the JP Morgan Emerging Markets Index is now wearing off a bit. The Nifty's intraday high was 19,795 and at the moment at 735. So about a 60-point shave off from the top. If you remember the morning commentary, we had mentioned that if you see an intraday rise, that rise should be sold into. That seems to be working perfectly. Apart from the PSU banking basket, there don't seem to be any broader gains that I can see sectorally, although stocks such as Maruti, Hindustan Petroleum, IFCI seem to be moving in. Yesterday we had discussed M&M Financial Services. The chart was moving fairly sharply. Brijesh, your view on this particular counter, moving from a agglomeration of moving averages yesterday. What does M&M Financial Services tell you?
Actually, M&M Finance is one of our positive bet. I won't be surprised till the month expiry, if we see somewhere close to 325, 330 levels. 330 levels, there is a lot of writing he's been seen in the M&M Finance. So it's a very beautiful and it's a very strong bet. So I think one should, irrespective of the market, even if by any chance we don't want Nifty to go down, but even if the Nifty goes down, I think yeah. So yeah, the view is quite strong. strong, and 325, 330 should be the target.
Okay. Got that. All right. Thanks a lot, Brijesh, for being with us and sharing all your views on several stocks that we've discussed in trade today. Great to have you with us. Let's now shift focus to our corporate radar section. And the company on our radar is RR Kabel, which is a well-established wire and cables manufacturer with a strong brand and quality products. Remember, the IPO came in last week. It got listed this week again. It was the first company to list in T+3 regime. The company listed at 1180 rupees per share. That was 14% higher than the IPO price of 1035. Remember, the IPO comprised of fresh issue of shares of 180 crore rupees, and the rest of it was an offer for sale as well. Joining in right now with us our top management of the company, Sri Gopal Kabra, the promoter and managing director, RR Kabel, joins in. And also joining us is Rajesh Jain, Chief Financial Officer, RR Kabel, with us. Gentlemen, welcome to Business Today Television, and thank you so much for taking the time out for this discussion. All right, we'll just wait for the management to join right in. But Shail, of course,
I'm there.
Yeah, can you hear us, sir?
Yeah, I can hear you. I can.
Okay, welcome to the show, sir. The first question that I have for you, Mr. Kabra, is about the kind of proceeds that you've raised. What would you be using them? And if you could also give us a clarity on the offer for sale by TPG Group, which has now reduced its stake to 5% in the company. Could you also give us a sense of, after this, would they be looking at further reducing their stake? Would they be looking at a complete exit in due course as well?
I'll do one thing regarding TPG. I'll talk, and regarding the fund use, Jain sir will reply better. See, regarding TPG, they have a lock-in period of 6 months now, as per part of SEBI guideline. And what they will do, how can we decide? So they are an investor basically, and it's up to them.
Sorry?
It's up to TPG to decide. We cannot tell anything about this. TPG is a balance stake of 5%, 5+ the percent they have stake here.
And what is your usage of proceeds of the 180 crore rupees going to be for? Are you going to be reducing some debt? And what would be the debt position then on your books?
So out of 180 crore, we are using almost to repay our term loan and working capital. And rest will be used for a general corporate purpose.
Mr. Kabra, welcome to Business Today Television. It's such a pleasure to host you again, sir. And congratulations for this wonderful listing that happened 14% higher as far as the IPO price of 1035 is concerned. Please share with us what is the capacity utilization at the moment on average of your 5 plants that manufacture wires, cables, and some lighting equipment as well. And where is this likely to be 1 year from now, sir?
Jain sir will handle day to day, so better Jain sir will please.
So thanks. So as of now, we are using almost 65 to 70% utilization for our wire and cable capacity, which is considered very good. And looking to our expansion plan, we have already planned to have a capex of almost 500 crores in next 2 years, and to meet the projected growth and to meet the various new products and existing products as well.
Okay. Mr. Kabra, one more thing I wanted to understand from you. If you could give us a better sense of the revenue mix. I understand between the wires and cables is your major business, and you also have FMEG, the fast-moving electrical goods, as a part. Could you help us understand the revenue mix? Which is the bigger portion right now? What will be your focus going forward from here?
See, of course, our biggest revenue is wire and cable. So almost 88.5% is our wire and cable, and 11.5% FMEG. And out of this 88% of wire and cable, 66% is domestic and 22% is export. And among wire and cable, 70% is wire and 30% is cable.
Okay. Mr. Cabra, we've seen demand coming in from Europe that is weakening because of the crisis that we've seen because of the war between Russia and Ukraine. How do you see your exports over the next 2 or 3 quarters to Europe panning out?
See, there is advantage and disadvantage of both Russia and Ukraine war. The advantage is because Ukraine, they have some cable companies, they used to supply material to Europe. So they are unable to supply from Ukraine, number one. Number two, the demand of wire and cable, because the model of business is changing from fossil fuel to green fuel. So there is going to be a demand. It's up to who will take the demand, that's the question. There are a lot of investment coming into solar, a lot of investment coming into wind energy, because they want to reduce their dependency on Russian power. So they don't buy anything now from Russia. So there's an advantage for in the medium to long term.
Okay. Mr. Cabra, I wanted to also understand from you, have you seen any impact of the chip shortage at all in your industry, in your sector and the business that you are in? And what is the situation right now and what would be the festive outlook? Has that improved?
See, regarding chip shortage, we are not impacted directly. Only thing is that our machines which we buy, they will become costlier and delivery has delayed. Number one. Number two, the chips. In chips, the wire used, there are very thin wire and very small quantity wire used where the chips are involved. Yeah. So we are not much impacted about this. And now things are improving.
Okay.
Mr. Jain, this is a question to you, sir. How do you see your raw material costs moving over the next 2 or 3 quarters, given the problems that we see in supply chains at the moment?
See, if we see from supply point of view, there is no shortage, or since last 2 years we have seen a good supply. Now there is price volatility, and I think that is part of metal industry. So there may be ups and downs, but looking to our long-term strategy and view, it seems that there will be like no shortage in supply, and prices may be up or down, but we will be able to pass on to our customers.
Okay. Mr. Cabra, if you could help us understand, I believe your current market share in the wires and the cables business is somewhere around 5 to 6%. What is the outlook right there going forward from here? And do you think there is more, shift happening now from the unorganized to organized market? And will that really benefit you as an organized player?
See, this is a journey. It's been shifting from unorganized to organized, and it will keep shifting. It may take some time. Depends upon how the market takes place. Because if you see after the COVID or demonetization and after GST impact, all three together, they're shifting from unorganized to organized shifting. Now the shift will happen, which is my belief that people will move from brand to trusted brand. So because as a RR Kabel, we are the only company in the world which got 35 international approved single factory. We are the only company in India which got 100% REACH compliance and ROCS compliance, which are not mandatory basically. But as a company, we want to safeguard the environment, and safety is an utmost priority for us. I believe people will look into this, and kind of market demand is there. Of course, we would like to increase our market share.
All right. Well, at that note, I'd like to thank Mr. Cabra and Mr. Jain, both of you. Thank you so much for taking the time out for speaking to us. All the very best, and we shall hope to catch up with you on the quarterly results again. Many thanks for being with us on the show, sir. Let's get back to the markets right now. Both the Nifty and the Sensex are slipping below the flat line, about 30 points lower on the Nifty, 19,713 currently, 50 points lower on the Sensex right now. Of course, it is the Nifty Bank that is holding up 0.25% higher in trade, and within that PSU banks definitely the top gainers, 2% higher for this index. And of course, we also see some pickup happen, some consistent buying happening in private banks and financial services, but rest of the sectors are now losing their strength as of now. Oil and gas, Even small cap stocks, they have shifted into the red, mid caps also. So the broader markets are coming under pressure. Consumer durables, FMCG, IT and metals, they're all slipping into the red. The top loser in terms of sectoral index today, right now is the healthcare index, which is down 1.5%. On the upside, however, PSU banks, that's clearly the story that Shail was pointing out. Canara Bank remains the top gainer in the F&O basket, followed by, Bank of Baroda, Bank of Maharashtra as well. Of course, a lot of private banks also moving in tow. And, the financial names, M&M Finance also moving up in trend right now. And of course, on the Nifty, Maruti Suzuki clearly in top gear, 1.2% higher in trade, followed by M&M. That's also moving up in trade. From the capital goods space, L&T is coming back in flavor, 29.08 currently. So looks like it's the heavyweight counters that are kind of supporting the markets right now, apart from the PSU banks. Shail, anything else that you spotted?
Yes, actually, I think we are going to see pain building back into Bank Nifty. Remember, yesterday's low was 19,711 and that's been broken. Now the low has been broken. That means more selling pressure will come in, and it sort of seems to have started. You had just pointed Nifty at 19,720. Now it's at 19,700. I believe 700 will break, and that is the pain point for today again. If you see a break of 19,700 will also mean that the Nifty is now at its 2-week low. The last time we saw this price, it was 7th of September. And let's see how it goes. So the 8 EMA is broken. The 20 EMA has also been broken. And now the 50 EMA on the Nifty is at 19,540. Let's hope we don't see that. But if you remember the morning commentary, the first point of support was at 19,600. So let's see whether that happens or not. But selling pressure building in as far as the index is concerned, and it's Infosys that is sort of creating the maximum selling pressure. Infosys is contributing to a 12-point fall on the Nifty. ICICI Bank is contributing to a 6-point fall, 5.6 point falls on HDFC Bank and Wipro. The stocks that are holding the index up are Reliance, 2 points there, Axis Bank 3 points, Maruti 3 points. On a net basis, 19,700 is now with the bears, and it's a sign that things might actually go their way as far as the markets are concerned. At the moment, the first support is 19,690. Let's see if that holds as far as the intraday support levels are concerned on the Nifty. Sakshi.
Absolutely, Shail, and we'll continue to track the market movement through the trading session for all our viewers. The initial exuberance was short-lived, it seems like, but at least it's a long way to go. We'll keep our fingers crossed for this Friday to turn out to be, thank God it's Friday, just like how Shail pointed out. Let's also get ready for our special series that's Market Masters, where market gurus reveal their investment strategies for a winning portfolio. So join us on this coming Monday, that's 25th of September, with Saurabh Mukherjee, founder and CEO of Marcellus Investment Managers, to get his market insights and in-depth market analysis. You can also send us your queries on the number that's flashing on your screens. That's 730-308-0488, and these questions will be taken live.
For an ambitious development stuck in a legal quagmire for the past 12 years, the Bombay High Court ruling comes as a big relief. A recent order on Darwin Platform Group of companies, Lavasa Smart City, ruled that renewal of environmental clearance would not be required if it has been obtained before by the companies. Lavasa Smart City got the clearance from Union Ministry of Environment and Forest in 2011. According to the company, the decision clears the path for the resurrection of India's pioneering Smart City initiative, a vision that is now set to be realized under the stewardship of Darwin Platform Infrastructure. The company added that the judgment clarified that once environmental clearance is obtained, it does not need to be renewed, alleviating a major pain point for the Lavasa Smart City project. In a precedent-setting decision, the Bombay High Court has categorically decreed that the environmental clearance for construction projects need not undergo the arduous process of renewal or revalidation at a later stage. Darwin Platform has sought approvals from the Union Ministry of Environment and Forest to erect the world's tallest statue of India's Prime Minister and net zero retail, holiday homes, entertainment, institutions and hospitality at Lavasa Smart City. Ajay Harinath Singh, the chairman of Darwin Platforms, has further announced that 500 acres in Lavasa will be used for 3 defence airports, one each for Army, Navy and Air Force defence enclaves with training and sports facilities. The promoters is also all set to construct 1,500 3-bedroom houses for IPS officers, an equal number for IAS officers and an additional 1,500 for IRS officers. Bureau Report, Business Today Television.
If you like the video, do like, comment, share and subscribe.
Mr. Palvia, your 2 stock picks for today, sir.
So one long, one short idea which I just wanted to highlight here. The long side trade is from AU Bank. We have seen despite of negativity in the market, AU Bank was showing outperformance, and we have seen that stock almost closed near today high. The kind of breakout which we are witnessing on the daily as well as on the weekly chart, we expect that AU Bank can continue further more upside. We are projecting target of 785 to 790 in the continuation of this uptrend. One can buy with stop loss of 740. The short side idea is JSW still. We have seen that stock now slipped below to its 50-day moving average. There was a short built-up setup in the previous session. Looking at the near-term structure, there is a weakness on the near-term as well as on the short-term chart. We expect that furthermore downside move we can see in the continuation of trend. Looking at the chart structure, we are projecting target of 760. One can short with stop loss of 800.
If you like the video, do like, comment, share and subscribe.
Yeah. No, we got a massive show lined up. Wait. What's that? I'll call you back. Hello? This is the camera? What candid camera? I'm smiling. This must be a shoot for Tech Today. Well, my name is Ayush Alavadi. I will be your host for today, and you're tuned in to your favorite technology show in the midst of Techtember. And when I say Techtember, well, you know I'm talking about the big Apple event. What went down in Cupertino? What are the new iPhones all about? Should you upgrade your Apple Watch, your iPhone? Should you wait for an Android device? And where does India stand in the larger scheme of things? So many questions, and we'll be getting all the answers here on Tech Today. Stay tuned, but first, let's wrap up everything that happened from Cupertino.
Welcome to Apple Park. We're so excited you could join us today for some big announcements about 2 essential products, Apple Watch and iPhone.
Apple made some big announcements at its Wonderlust event on Tuesday night. The much-awaited iPhone 15 series that includes iPhone 15, iPhone 15 Plus, iPhone 15 Pro and iPhone 15 Pro Max made a grand debut, along with an all-new USB-C port for charging. This is the first time ever that the company has Type-C port for iPhone models. which means that you can now charge all your Apple devices with the same cable. This was one move that experts part of the Tech Today Apple event watch party had been waiting for.
It took a lot of time for Apple to go on this. If you look at from the sustainability point of view, I think that makes a lot of sense because you have so much of e-waste that is also being generated by these chargers, almost like 55,000 metric tons of chargers in the form of e-waste is being generated every year globally, and people do not need a lot of chargers in their home. So I think this story now syncs perfectly with their sustainability theme as well, to go less on some of these devices, including chargers. So obviously better late than never. So finally it's been done from Apple.
The iPhone 15 and iPhone 15 Plus models will come with dynamic island feature and a 48MP dual rear camera setup. This time, the standard models are available in a new pink color option. The price, 79,900 rupees for iPhone 15 and 89,900 rupees for iPhone 15 Plus in India. The biggest highlight of the iPhone 15 Pro and iPhone 15 Pro Max models is their new titanium frames. This time, Apple ditched the stainless steel body design for their flagship device and made the handset lighter and more premium. The iPhone 15 Pro Max also comes with a new periscope lens that offers 5 times optical zoom. Both these models are powered by the all-new A17 Pro chip. In terms of pricing, iPhone 15 Pro will cost 1,34,900 rupees, and for an iPhone 15 Pro Max you will have to shell out 1,59,900 rupees in India. But it now comes with 256 GB of storage in the base variant. Apple launched a new Apple Watch Series 9 and Apple Watch Ultra 2 at the Wanderlust event. The headlining feature of the two smartwatches is the double tap that enables users to attend or decline calls. Set timers simply by tapping the index finger and thumb of the hand you are wearing the watch on. They also come with on-device Siri so that there is no lag in the response. Stay tuned to Tech Today for the detailed breakdown of these devices that's coming very soon.
Well, so the Tech Today team has been working in overdrive to bring you up to speed about the Apple event. Now, pre-bookings start on the 15th of September and the devices will be available here in India on the 22nd of September, like the rest of the world. But you'll still naturally have questions, and here on Tech Today, we want to engage with you and give you some answers. Now, let's connect with you, the Tech Today community, to find out exactly what questions you have about the Apple launches.
Hey Ayush, Ankit here. I wanted to ask you about the Apple Watch Ultra. Do you recommend that I buy it for my dad for its health features?
Ankit, appreciate you watching the show and consuming our content across the multiverse. Now, that is a very pertinent question. In fact, a lot of us in our generation seem to be asking that question. Hence, this is an answer for all of you who have WhatsApped me, given me Instagram DMs and all of that, and asked this very question. Should I buy an Apple Watch for a senior member of the family, maybe your mum, your dad, or your grandparent? There's a lot of marketing and reportage about how the Apple Watch can detect, well, heart issues and, all sorts of things in terms of blood oxygen saturation and, a bunch of health and fitness features that really seem to work well on the Apple Watch. Honestly, I personally have, invested in that ecosystem because it really helps me for health and fitness reasons. Now, your question is very specific about the Apple Watch Ultra for your dad. Now, while it's a great investment in terms of battery life, it's a little bulky and it's really meant for the rugged outdoors. If you're using it as a dive computer, you're going swing with it, or you're in the middle of a really, really difficult mountain trek, then the Ultra makes more sense. Otherwise, and this is the caveat, well, a normal Apple Watch, Series 8 or a Series 9, does a fairly decent job when it comes to health tracking capabilities. The only little bummer about the standard Apple Watches is battery life, around 18 hours. So once a day you have to put it on the charger. Otherwise, it's a more value for money alternative for your use case. So if you're buying your dad a Diwali present or a Christmas present, I think the new Apple Watch is a great idea. The Ultra is a luxury. If you're willing to splurge on, it's a great device, but you can save a lot of money by investing in the standard Apple Watch Series 8 or Series 9.
Thanks Ayush for the awesome info. I will definitely keep this in mind when I'm shopping for the Apple Watch Ultra.
Hi Ayush, this is Niharika. I saw your coverage of the Apple event and I wanted to ask that if I want to buy an iPhone, should I buy iPhone 15 or iPhone 15 Pro?
Niharika, I'm glad that you're tuned in to Tech Today, like the rest of the Tech Today community, and that is a very valid question. But I want to give you an official and an unofficial answer. So, for the official answer, look, the iPhone 15 is a very good device. But the way Apple usually launches their standard lineup and the Pro lineup is that they differentiate with what is under the hood and, of course, the hardware outside. The software experience is largely the same. Now, you asked me about the 15 and the 15 Pro. The 15 Pro is still not as superior as the 15 Pro Max this year. The camera system is better, but of course the Pro lineup now comes with a titanium build. That means that it's a little bit more durable, it's a bit lighter, and hopefully a little lesser of a fingerprint magnet. Let me use it in the coming weeks and I'll tell you a lot more about it. But the 15 comes with last year's flagship chip. That's an A16, very, very capable and competent. Personally speaking, I think the 15, if you're into more pop colors, gives you better options. There's that Barbie pink that everyone's been talking about as well. But the Pro and Pro Max come in slightly duller, more titanium metallic sort of finishes. The unofficial advice that I have to give you on national television is that it really matters where you are buying that particular device.